once again. And today I'm going to start with a question basically. So use the chat to answer that. If everything in your portfolio was tested tomorrow, would it hold up? Simple question. Tell me yes or no.
Yes, it will hold up very well.
I would say kind of yes or no, but after talking to you, I have the maybe answer as well, Ashley. After talking to Cherif last time, I thought this was such an important topic, and that's why I wanted to bring this master class to everyone because I think everyone as an investor, we just always chasing new deal, but we forget that we need to protect what we already have, and I think that's the reason we wanted to bring this master class to you before you buy another property. Fix this, and it's very very important to learn how to protect what you got. And I am 100% sure by the end of the master class you're going to be really enlightened, like it happened to me. The light bulb went on when I was talking to Sharif last time. So today my good friend Sharif Madwar is joining me for this insightful session. And he has decades of experience in real estate investing, structuring deals, helping investors protect their wealth. I don't know, Ashraf, you do multiple things. You're just like all rounder and good at everything, basically.
You're so kind. Thank you. Well, you start and then you evolve and then you realize, oh my God, I have assets, a lot of equity. I have to protect myself. Okay, now I've protected myself. I have assets. People want to invest with me. How can I go to the next step? And this life goes one step at a time, but it's always like uphill. You got to keep building, building, building until one day you see the horizon very far and you say, oh, it's good now.
I know, exactly. Yeah, that's very important. Yeah, so before we get started, I have a small little disclaimer.
Okay.
Let's see. So this session is strictly an educational session and should not be considered as a legal, accounting, or investment advice. If you have any legal or investment related question, please reach out to your attorneys or CPAs. And with that being said, small housekeeping item, if you have any questions throughout, please use the Q&A box. And then that's about it. Let's get started. Sharif, take it away.
Thank you so much, Venki. So everybody that builds wealth, as soon as you have extra money, whether it's cash or you buy a property and you increase its value and you have equity, the thing you worry about is, will my insurance cover enough? Because many people get sued beyond the insurance. As a matter of fact, I've interviewed many attorneys that specialize in insurance businesses, and they tell me that they used to represent insurance, and they say when there is a claim, the first step we do is deny the claim and then see what happens. If they come back again, we try to say, oh, this client of ours had some negligence, so we tell the client there is contributory negligence, you have coverage for $1 million, we'll only cover $500,000, etc. So what does the plaintiff do? They go after whatever equity and assets you have. Whether you have equity in your residential or commercial building, or maybe a business, I wanna show you how to protect it. But let me first, by starting, I'm gonna give you like a little strategy here on this flip chart, and I'll give you this example. Let's say, it's gonna adjust to me standing a little bit to the back here. But let's say you have, you wanna do commercial real estate, and you see a building, a standalone building, just a standing all by itself, just a building that actually is vacant, and you want to make an offer. So you make an offer and they want 650,000. You tell them, here is my contract. I'm going to offer you $600,000. So you have the property under contract at 600,000 vacant. I'm going to show you first how you're going to make the money and how you're going to protect it. So the single tenant building, those are the standalone, like an old Jack in the Box or maybe old Starbucks, they're sitting vacant. You're gonna actually put it under contract. You have 45 days usually for due diligence and another 15 days to close. So what you're gonna do is you're gonna start smiling and dialing. So you're calling national tenants and telling them, I have a property at 123 El Camino Real. There is neighboring tenants, this and that. There is traffic, so many cars per day. One tenant gets excited, say, we want to rent this place. And let's say they tell you, we're going to give you $8,000 a month. Forget it. Let's even say it lower. They're going to just pay $5,000 a month. That means $60,000 a year. And they're going to sign with you what's called an LOI, letter of intent. Let's say Subway, say we want that location. We will lease it from you for 10 years with escalation. That means every year 3% more, corporate guarantee. And we want to start as soon as possible. and they signed this letter of intent saying all that good stuff. With $60,000 a year rent, that property at 6% cap will be worth $1 million. What does that mean, worth $1 million? That means the actual property increases in value because it's going to produce income. And on these type of buildings, when you actually have a property producing $60,000 a year, a 6% cap, that means the capital works at 6%, anybody will pay you $1 million for this. If you go to the bank and tell the bank, I would like to buy this property. I have a contract to buy it right here for $600,000. The banker, commercial bank, is going to say, yeah, but it's vacant. We don't know if we want to loan you on a vacant building. Oh, Mr. Banker, Mrs. Banker, I have right here an actual letter of intent that Subway want to come in for 10 to 15 years to lease it from me. They give me a corporate guarantee. They're publicly traded with 36,000 plus location worldwide. They will pay me escalation 3% and they will pay the lease triple net. That means that lease is net of tax, insurance, and maintenance. The tenant pays all that good stuff. So now the bank says, oh, okay, we know it's worth now about $1 million, but since you're buying it for 600, we need, let's say, 30% down payment. So 180,000, let's say 200,000 down payment you're going to put. You're going to get a loan. Let me get a red pen here. You're going to get a loan for 400,000. That's your loan. And what ends up happening now, you have a 400,000 debt, but the property is worth $1 million. And now you have Subway paying you 60,000 a year. So your payment are 2,400 a month, something like this, but your income is 5,000 a month. You have positive cash flow, but the most important part is you have a tenant that's going to pay you steady for many years, and you have equity of the 200,000 down payment you put, and you have also an increase in value on the property of $400,000. So you have total equity of 600,000. By the way, this strategy I gave you is what made me very wealthy in a lot less time than so many people trying to buy apartment building and put tenants and kick them out and have staff and all. I have no staff. I have nobody. I find the building. I call the tenants. I put 5,000 upfront money. I show them my proof of fund. And when I line up the tenant, I go and I buy it. And what happens is I end up having a property that cash flows for years. I've done another session about this before, and Vinky, we can do one training people on this if anybody's interested in the future. I even train people to find the deals and assign them to me, and I pay them on that 400,000 increase in value. I pay them 10%, 40,000, or if we get them to sign a lease for 15 years, I pay them 25%. They make 100,000. We have success stories on YouTube, like we have 1,000 video success stories. You can see them. But the key thing is, once you have that money in there and the 400,000, you now have a 600,000 equity. You want to protect that money. So how do you protect it? I'm going to assume that's all you have. If you understand it on one, you'll understand it on a portfolio of $1 billion if you want. What we do is a Wyoming LLC. So in Wyoming, why Wyoming? Because Wyoming is where the actual, I don't know if you can see Wyoming, let me write it here. Wyoming LLC. Why Wyoming? Because Wyoming is where the LLC started in the early 70s in the United States. And what we do with this is when we set up the Wyoming LLC, so Wyoming LLC, we have, when you set up an LLC, you get a tax ID, you get an EIN number, and you have to capitalize it. You have to fund it. You can open a bank account with your EIN number and your articles of organization, and you have to capitalize. You have to put money in the account. And now what you put is, you put an IOU that you're gonna put the money later of $600,000. Why? Because you have 600,000 equity right here in that property. And if, God forbid, something bad happens and they sue you for $2 million because You own this property, even in your LLC, it flows through to you, etc. And you hit somebody with your car, they're gonna go after your home, after your investment properties, and the insurance covers 1 million. Well, they're gonna go beyond the insurance because they see there is equity. They say, well, we're suing you for 2 million. Your insurance paid 1, we're going after another million. But if they win the lawsuit and they force you to sell the property, you have to pay the bank, and you got to pay them from the net equity left. That's called a charging order against you. So if you have money, people can come after you, sue you beyond the insurance. This happened over and over. You can see it, you can Google it, you can hear stories all over. I've done educational events for 25 years. I've heard amazing stories and situations. So I learned that no matter what, the bank, because they have a lien against the property, they get paid. So I said, well, how can I put a lien for me and get paid that's legal in the United States? So I found out there are 3 types of liens in the United States that are upheld federally by all courts. The first type of lien is when it's a bank loan. They gave us the money, they're owed the money back. So that type of lien is called the mortgage lien. The second type of lien is the actual called mechanics lien. If you build a pool or you have a contractor working on your property and you don't pay the contractor, that contractor can record by law a mechanics lien. He's owed an extra, let's say $25,000 that you didn't pay this person. The third type of lien is what's called work for hire, or owed amounts. Like, for example, if Vinky and I go into a partnership, open an LLC, and Vinky says, I'm putting 100,000 in this LLC that we're going to be partner, Cherif. I say, Vinky, that's wonderful. But you know what? I don't have 100,000. I'll tell you what, I'll put it later in the LLC. So I'll put an IOU 100,000. She's going to say, okay, well, we need to record it as a lien against this property so I can make sure you actually will put the 100,000 later. And that's exactly what we do here. We set up the Wyoming LLC, and against the property that we just had that has 600,000 in equity, we record a lien, which is an IOU, to the Wyoming LLC, which we're gonna call it, let's say, ABC LLC. We don't call it with our last names, but ABC LLC, and it flows through to a living trust. We put 13 business reasons in the articles of organization and the actual operating agreement. We've put 13 business reasons for this Wyoming LLC to exist. We say it exists to consolidate family money. It exists for the future of the family as we grow. It exists to make it simpler for the accounting as we continue to grow and compound our profits, and also for asset protection. Why is it asset protection? Because this now 600,000 that we actually recorded on this property have stripped the equity. There is no more equity. There is now, it's showing 400,000 to the bank, and it's not showing 600,000 equity. It's showing actual 600,000 debt to the Wyoming LLC. So now the property is worth $1 million, but has liens for $1 million. That Wyoming LLC is owned by us. It's a living trust, comes through to us. The beauty now is I have a debt and I have an asset, because the Wyoming LLC is owned by us. So it's actually a wash. Doesn't affect your balance statement, your financial statement. And actually, with that promissory note that gets recorded against this property, anybody trying to sue you is going to say, if he's going to go to an attorney, the attorney is going to say, well, John or Susie have a single tenant building that's cash flowing with Subway, but they owe the bank 400,000 and they owe some financial LLC 600,000. Those are liens recorded here by law. There is nothing to go after. Let's settle with their insurance. And by the way, if the person who wants to sue you says, I don't care, I'm going to sue them anyway, so that I can force them to sell the property, the judge in court is going to say, well, I can force them to sell it, but what's going to happen is there is a loan from a bank and there is a lien from an entity outside that was set up. Listen to this, that was set up before the incident happens. So the judge is going to tell them, if I force them to sell and you win an extra $1 million over what the insurance covers, you're going to have a phantom income IRS tax bill. The IRS is going to say, you won a lawsuit for $2 million, you received only $1 million from the insurance, the other $1 million you didn't collect, but you're going to have to pay taxes on it. And that's just the code. As a matter of fact, the Internal Revenue Code is for phantom income. And if you want to verify this, Wyoming LLC has also what's called the charging order protection. So not only will they not be able to collect any money, they are going to have to owe the money to the taxes, but Wyoming will stay intact and you will stay ownership with the property and enjoy it. And if you have a second one, a third one, a fourth one, all you need is one Wyoming LLC, one. And you're going to record a lien for 600,000 here. Let's say you do this again, and we set up another one for you, another one for you. We just record liens against how big your empire will get. That's how I have grown. Because when I bought my first property and the property went up to $1 million, I went back to the bank and asked the bank, would you loan me? I have 600,000 equity here. I put 200. The bank said, you have a tenant paying you for 10 years with a corporate guarantee. We can refinance for you, cash you out the 200 you put. So I took the 200. I had now 400,000 loan and a new 200,000 out. So my balance was 400,000 equity, and I protected my equity. And I took the 200, did another deal and another deal. And the first one, I'm making $2,400, $2,600 per month income. Let's say you do this 10 times, you'll have 26,000 per month income against a property. So you write off tax deductions, depreciation, and everything is protected with one Wyoming LLC protecting all the equity of 400,000 on 10 properties. That's $4 million increase in net worth. What did you start with? 200,000. And let me tell you how I started. I started with cash advance credit cards on my on cash advance. I would call the credit card, say, if I can get a cash advance, can you charge me just 6% instead of 21%? And they say, well, the best we can do is 8%. So I would get it, put the tenant, go to the bank, refinance with the same bank, because you don't want to use another bank, you have a prepayment penalty. And then cash out the money and go do it again. You want to see my portfolio? Go to CREPR.com, Commercial Real Estate Puerto Rico.com. I became the largest owner of historic properties in the US territory of Puerto Rico, repeating the same thing. I started with a little bit more money because when I went to Puerto Rico, I had already so much money, but I thought, oh, I'm going to go save taxes. And then I realized, oh my God, there is an opportunity I can keep repeating. So no matter what you're doing, you will find that protecting your equity is the way to grow with peace of mind. And when you set up the Wyoming LLC with a living trust, now not only have you protected your money, but you're able to pass it on with a legacy structure for your kids and grandkids. Because all you need now is to get life insurance. That's it. So when you die, there is more money to pay off some debt, but you have everything in the living trust owned by the Wyoming LLC. All right, so I will take questions. If you want me to, I'm happy to take questions.
Yeah, and let me remind everyone, if there's any question, please use the Q&A box or even the chat. And I'm pretty sure you might already have so many questions because this is a really good concept and might be new to some of you. I think when I heard first time, I was like, wow, it's kind of mind-boggling. So please use the Q&A and ask your question.
And let me add to it. Let's say you have your home, okay? So we set you up and you have your home, and we, let's say, set up the Wyoming LLC for you, do the paperwork and strip the equity on that home. But you also have two investment properties, one in Wisconsin, one in Florida. And one in, let's say you have another one in, let's say, Seattle, Washington. You have some states that are judicial states, some states not judicial states, but we do all the paperwork for you to record these liens. We send them to you, and then you can record them. You literally send them to the county, just click, sign, send them, and record the liens, stripping the equity. So you have equity. You're able to show the bank that you own the LLC to whom the money is owed. So the bank can still give you credit lines, whatever you want. When you sell the property, we can cancel those liens. It's like $80 or $50, depends on the county. And you're protected. Anybody want to sue you, you got to say, sue me. I have insurance. I didn't mean to do this. Sooner or later, they're going to come back and settle with you. We've set up dozens and dozens of people that are developers, contractors, doctors, dentists. My sister's a doctor, set up the same way. Her husband is in internal medicine, set up the same way, protecting them, giving them peace of mind.
So
And
let
by the
me
way,
ask you this question.
uh,
I'm
uh,
sorry, I was going to
sure, ask me.
sorry, didn't mean to interrupt you, but wanted to ask you this question. I mean, in your experience or this long career, you've been doing it for a while. What is the biggest protection mistake you have seen people doing it? Because people are trying to protect themselves, right? This way or that way.
Yes,
So I wanted to kind of put the contrast out there for everyone.
thank you. The biggest problem is there are two types. There are the people that think insurance is just an expense, and those other people that say, I want the maximum coverage to a ridiculous amount. So they overpay for their premium, you have the other people underpay. When the problem happens, the insurance companies, and you can verify this, will tell you, if you overinsured, we're not gonna cover you, we're gonna now pay you less than the 25% of the value of whatever, like they penalize you. And if you're underinsured, they're gonna find ways to tell you, well, we didn't cover that part, this is an exclusion, this is a deduction, this is this. And I've had interviews on my website with judges that used to work for insurance companies, and they explain how the insurance comes out from paying. And they say this is the only way to protect yourself truly. So the mistake is, don't think the insurance is something as an expense. It's something to protect you because you're shifting the risk. And don't over exaggerate it because there are rules to the insurance business. So you ask the insurance, this is my building, give me the replacement cost, give me this for liability, and that's it. You will have enough coverage, but it's never enough because whoever want to sue you can say, this is a case I had somebody that was told, hey, this person is a dentist and they were making so much per year, and you hit them on the bicycle, they were on the bicycle, so now he can no longer be a dentist because his hand shakes. His potential income was 3 million a year. Now your lawsuit is for 3 million. Well, you did good insurance for 1 million. You said, well, what's going to happen? I have $1 million insurance. They come after you for 2 million difference. You're protected like this. That attorney for the plaintiff is going to come in and say, you know what? There is nothing to go after here because they don't have any equity. And even if you go to court, or before you go to court, there is something called discovery, where they sit with you and they say, tell us, who owns this Wyoming LLC? You can truly say it's owned by the Living Trust, and I am the actual owner, my wife and I, my kids and I. There is nothing hidden here. There's no BS of anonymous corporation and Nevada, none of that. You can go to nolo.com and see when the judge asks you who at the end ultimately owns this entity. If you don't respond accurately, you're in contempt of court. Okay, they repatriate money from Cayman Island. People will tell me, I want to be set up in Cayman Island. They will tell you to repatriate the money or you're in contempt of court. So you say everything with an open hand. You disclose everything. Yes, Your Honor, I have insurance. I'm a responsible person. I'm sorry I hit this person, but I have insurance. No, this entity, the Wyoming LLC, was set up before the incident happened. It was set up even a day before. That's not a transfer of asset. That was a structure to transfer family money and protect the future of the family, and asset protection also. Extremely powerful. And people usually ask me, and I'll answer your questions, I'm sure you have questions. People usually ask me, okay, Cherif, I have my property, I have 2 investment properties, but I also have a business, I have a factory, and I'm afraid the employees will sue me, or they can take some of this machinery, it's worth $500,000. You know, we set up mortgage liens against the properties. Okay, these are liens. That's the way it works. But against a business, we file a UCC1. It's called the Uniform Commercial Code. So if you have a business and it's worth $500,000, we record a lien to the Wyoming LLC for the $500,000, and we put the serial numbers. That means the loan, the actual debt, to fund the Wyoming LLC, that actual debt is secured against the equipment and against the value of the business and receivables, etc. So what questions do we have?
Wow. So there's multiple questions that we have. So one question, I think, let me start with Mizar, if I'm saying the name right. Sorry, I've joined late. Does your solution for living trust insurance work in Canada?
Well, it's the same process in Canada. We do have an office that we work with in Canada. So it's the same exact thing, because when there are liens in Canada, as you know, the government gets involved in the loans that you get over there and how much you get approved. So once we record liens there, it should work. I'll have to look more closely at the province you're in.
Great. So another question is, so happy many properties can protect under one setup. Are there any requirements? What if we have properties, LLCs, and some in personal name? Can you explain how the capitalizing works?
Excellent. So let's say you have a property, your home is under your name, you have an investment property under an LLC, and you have a business under a C corporation. The ownership doesn't matter. What we will do when we set you up, you're going to tell us, this is my debt, this is my equity, this is my debt, this is my estimated equity, and we put the liens against these, one LLC, one in Wyoming that records actually against the personal name, against the C Corp, and against the LLC. As a matter of fact, you do not need to transfer ownership. Like I've heard attorneys say, oh, you have the property in your name, transfer it to this LLC, will set you up with the LLC, each property in its own LLC. My God, by the time you finish, you have 16 LLCs, and then each one is a different situation, and then you have to go to the attorneys every time you want to do all this. No, it doesn't matter who owns it. You do not transfer ownership because you don't want to trigger reassessment of the value of the property. You don't want to trigger transfer tax, none of that. So to answer your question, one, no matter who the owner is.
Great. And then the follow-up question now from Ashley is, what if I want to refinance or get a HELOC? And if I have a lien on the investment property, what will the bank do?
Okay, so if you want to get the HELOC, is a home equity line of credit. So you go to the bank and you say, I would like to borrow 100,000 against my property. The bank will look online right there and say, oh yeah, we have a first lien with you. Oh, and you have another lien there for X amount of money. Yes, you tell them, that's to my entity. Here is, because you receive everything by email, you forward it to them. I have the certificate of ownership. This is my entity, and I did it to protect myself. Now they're going to say, well, we need you to remove that so we can record the second lien as a credit line. So we do what's called a substitution of collateral. So we remove it from the second, the bank records the credit line, then we record it as a third lien, strip whatever equity is left, because the bank will almost never, ever give you 100% equity on the property as loans. They will always leave a 20 to 30%, especially when you're dealing with multiple properties.
Great. So a couple more questions in Q&A. The first question is from Clarence. He wants to know, how can this be applied if there is a triple net lease with tenants like strip malls, and if there's a minimum capital rate?
So the lien itself, when you put the lien, it doesn't affect anything on the finances of the company because the lien is to you. Let's say the lien is $1 million. So you have a bunch of properties and it's $1 million lien, which is the Wyoming LLC. I owe $1 million. We're going to put, let's say that your interest on that promissory note is a payment of $5,000 a month, 6% a year. Usually you put it for 3.75 or 4%. Let's say you have a payment of $60,000 on that note. So you own the entity, the mall, and you have $1 million second lien to your Wyoming LLC. So you have to pay $5,000 a month. When we write the promissory note, we say that you must pay only one payment per year and 11 payments and interest only. One payment per year and 11 payments are deferred to the end of the loan, which is 30 years, and you can renew the loan and continue. So what happens is you just have to make one payment per year, which is from you to you. Remember, when you write the check from your apartment building or storage facility or multi-unit retail, you write the check from that LLC that owns that building to your Wyoming LLC bank account. You literally do an entry online because it's all online. So now you send 5,000. When it sits there, it's informative filing. It flows through back to you. So it's you to you. So that's an expense and income. It's called, the technical term is tax neutral. You can literally put the money there, pay from there, your property taxes, property insurance, any extra money that you spend, it's you to you. And that's how it does not affect your financial statement or anything in relation to the bank, because that's you to you.
Great. So another question is, please tell us about your training, including how many sessions, if you will provide ongoing support with cost.
Yes. Okay. So For those who want to do this, usually it's $10,000 to set up the asset protection. And then we work with you to set up liens if you want to later remove liens. So yes, we stay on board with you. There is no like yearly fee or monthly fee. Now with Vinky, we were able to do something special for you. And I think, what did we offer it to you for? I'm sorry, I have to look, 79.95 or 69.95 for Vinky. And I'm gonna tell you something. You can go to my website and see we never present this for less than 10,000. I have attorneys that take my program, our program that we set up with our in-house attorneys and all that, and they present it in seminar rooms, sell it at $25,000, and they charge us to do it, and they pay me 10 and they make 15,000 on the platform. But they're attorneys. We just have the attorneys working in my office. And if you know much about me, I have a full in-house team, etc. And that's the power of this. So 6,995 will set you up with the actual operating agreement, with the LLC, all documents you needed, with all the liens that we're gonna discuss the liens. Will even include the first lien, which is the lien against your home. We'll include it, nothing additional for that. And we will guide you through, okay, once a year, you make the payment here and there. We'll remind you to make the payment, and all you need to renew is just the Wyoming LLC. And we handle everything online with you, and you'll be able to talk to Ashley. As a matter of fact, you can set up a time. I don't know if we can, Ashley, if you can set up a
I
chat.
put the link in there
You
as
did?
well.
Thank you,
Yes.
thank you. So you can talk to her about your situation. We'll give you 15 minutes or so to explain, this is what I have, this is what I own, this is what I owe. Within minutes, we'll tell you what we can do for you. And for that flat fee to get you started, after that, as you add properties, we can just add liens, record liens. There is a small fee for that, but that's how it works.
Great. And there's another question. What if I am having an issue with a tenant now and I am preparing for a lawsuit? Can I set this asset protection structure up?
Exactly. Set it up before the lawsuit. Set it up before somebody sues you. Even though we did set it up for people after lawsuit, but I tell you, there is a 50-50 chance the judge says, well, when did the lawsuit start? Oh, it started on July 1st. And when did you set up your Wyoming LLC? I set it up on July 2nd. Oh, the day after the lawsuit? No, you're trying to play games now. But if you set it up before, this is like insurance. You arrive home, you paid off your home, and you say, I'm not going to pay insurance. Then you arrive and the house is on fire. You can call State Farm and say, can I buy life insurance? It's too late. You got to do it before.
Follow-up question. I see on your site that I can protect cash assets. Please explain.
Yes. So we set up people, and often things come up like, you know what, Cherif, I have 300,000 in my trading account, or I have 60,000 cash. And if anybody sues me and they go into discovery, when you sit down in discovery before the lawsuit, they say, tell us what assets you have. Well, how would you like to disclose everything and they can't touch anything? That's the power. But if you actually just have the cash in the trading account, you have to say, I have a trading account, and I have, let's say, 60,000 or 300,000. But when we set up the Wyoming LLC, we actually have you transfer that trading account into the name of the Wyoming LLC, because that activity of trading stocks or owning stocks does not give you any liability. So the Wyoming LLC sits in Wyoming. It does not do business anywhere in the United States, but it has a trading account. It has liens owed to it from California, Wisconsin, Florida, but it doesn't even have to register in any of these states because it's just owed money from these states. It's a very powerful way to tell the world, that's what I have, this is my money. If the judge asks you, so where do you live? You have to say, here is my driver's license, I live at 123 Camino Real Street. You cannot say, it's anonymous, Your Honor, I just took my property and I put it from here to here and put it in Nevada and hid it. The judge is going to say, don't play with me. No, not here.
Wow, this is seriously mind-boggling. Okay, everyone in the audience, I really wanted to hear that. How do you feel about this information that you have just received? Just say yes, or show some love to Cherif. He's spending so much time to teach us something new. Awesome. Thank you, Clarence. Please, be, There you go. Salal, Fahad. Yes, yes, this is really informative session. So, Sharif, I'm going to ask you this question now.
Mhm.
After all this information that you shared with us,
Mhm.
how should investors think about risk differently going forward into the next year?
Excellent. So all good investing starts with the assessment of risk. When you're buying a property, you're looking at the location. You're looking at the potential cash flow or cash out. How much liquidity you'll have. What kind of reserves can you keep? Are you diversified if you have another property to be in a different location? And do you have another plan B and C and D? One of the most important things is have the insurance. I'm not saying do this to substitute insurance. I say do this to supplement the insurance. So the next thing is once you have the insurance and you're set with an insurance coverage of some sort required by the bank and for your peace of mind, to truly protect the equity now, not just the bank's money on the loan, not just the debt to the whoever gave you the loan, but to truly protect your money and shift the risk from you to be able to be protected is to create another lien, because the entire law of the United States is to protect the creditor. Why? Because the country is built on banks. We have fractional banking. The bank, you put $1 in deposit, they can loan nine. So the Federal Reserve gives them the money and they say we got to give them the law that even if that individual who borrowed will and is forced to sell the house, the lender will always get paid. That lien has to be honored federally. So guess what? I cracked the code. That's one of the best things I did. This was, I don't know, 8, 9 years ago. I was in Cancun, and I was sitting thinking, I'm reading about court cases because one of my architects got sued. He was worth $5.8 million. 73, 74-year old, full of energy, so happy. Got sued. They wiped him out. He had rehabbed the property, sold it, and they said suffocation from whatever. And he said to me, I'm gonna get sued. These people are already threatening me over the phone. I said, set up like this. Set up like this. I had set it up. And he didn't listen to me. He said, no, my attorney said we don't need to do this. He's gonna fight it in court. Guess what? They fought it and lost. And he called me back, said, meet me at Starbucks. When I went to meet him, he looked like he aged 20 years. He looked like he's gonna die. Depressed. Not even a strong espresso could help get him to talk more. And he said, I should have done it the way you did. After we lost the case, we realized what I did wrong. If I would have stripped the equity the day before, not the week before, they would have sued. We wouldn't have had to spend so much money back and forth. We would have said, okay, fine, you win. Here is the insurance. They wouldn't have been able to go after this $5 million of net worth. It's pretty sad. I still know the guy till today. He's much older, but guess what? His daughter could have had an extra $5 to $10 million worth by that time. So I realized that how is this so powerful? It's because the banks always get paid, whoever has the lien. We had a guy with 16 subways in the Midwest. And when he called our office, he said, I have 16 subways. The attorneys made me set up 16 different LLCs, each one with the address of the property. I'm paying renewal fees, $400 for each. It's costing me so much. I said, one LLC. He couldn't believe it. One LLC will strip the equity and all this. All you need to do is just pay one LLC renewal per year, and everything is in your control. And God forbid, when you die, your spouse will have a very simple living trust that has everything in it. I mean, it's not like you have to explain and go to attorneys and all this. It's very simple. You can cancel the liens. The kids inherited it and stepped up in basis. That's how wealth is built and protected. You're shifting risk with the insurance and protecting your equity by shifting the risk through the proper liens in the United States.
Mm. Okay, so I'm going to go back to the same person who was asking the question earlier that they already have the tenants and they might get served. So she has like three-layer question, or he has a three-layer question. I'm going to read the whole thing to you. So if I have partners in my apartment, I own my house in my own name and have three rentals in LLCs, can I use this structure? That's number one. Number two, if I have a trust already.
Let's answer them one by one. If the property is in your name only your name will be needed to record the liens of the Wyoming LLC to capitalize it, to fund it. If you have a partner on an apartment building, you're going to explain to them the strategy. We have to set up one for you separate, because your partner will also have to sign, because you can sign and record something that has ownership on the deed of two people. And so If it's husband and wife going into that property, buying it, and you want to strip the equity, let's set up the Wyoming LLC. Your partners, the living trust is going to flow to both of you, but you will both sign on the lien that gets recorded. Okay, next question.
Okay, so the next question is, if I have a trust already, how will this impact the beneficiaries?
Oh, that's okay. What we're going to do is we can and have it flow to your trust. That's perfectly fine.
Okay, so knowing that I will be served soon by the tenant, how fast can you actually do this for me?
You call us right now when we're done with this call. You call Ashley right now and we can start the process. And I'll tell you how fast. You send us the info we're going to ask you because we need to know the properties, the address, the property description. We can set you up as soon as possible. I would say within 4 to 5 days max.
Perfect. So I'm going to remind everyone, if you have more questions, please use the Q&A box or the chat. So yes, Jay, the recording's going to be available. And I did put the scheduling link in the chat for everyone. You can schedule a call with Ashley and she can walk you through how the whole process is going to work. And also add the link for you guys, to avail this discount that Cherif is offering. I'm going to add it again.
Yeah, and I want to be
For
sure that they know it's 69.95 just here, and it's gonna be to the end of the month, to the end of this month. So April 1st, we go back to the 10,000. I really never discount it, but we've had such a good relationship. This is no joke. You will see it. It's always the 10,000, and that's how we do it.
Okay, perfect. So I have added the link to schedule a call with Ashley, and also I added the link for the asset protection. I know somebody was asking earlier about the JV program. So we had one masterclass before, but we can definitely have another one. And as I mentioned, Sharif is just like, oh my God, he's a powerhouse of knowledge.
Yeah.
I'm not sure how many things he does, but here is
Mhm.
the link to that JV program as well as somebody wants to sign up. And that program, I think that discount, I think he will still honor that if
We'll
somebody
honor
wants
it.
to join that. I think Parveen wanted to join that. So you can check that out. And obviously, there's a link to schedule a call with Ashley. You can speak to her directly as well before you're doing anything.
Yes,
So
and
if you're going to say something, go ahead.
yes, yes, thank you. Sorry, I didn't mean to interrupt you. I get excited. The joint venture program is the program I mentioned about a single tenant building because I train you guys, whoever's interested, like a joint venture. I do the training personally. You also, as soon as you sign up, you have access online to the videos and the training and the word definitions and all that powerful stuff. And what happens is when you join and get the deal under contract, I give you the proof of funds so the brokers take you seriously. I tell you the script with the broker. I give you a tenant list to call on the tenants. When the tenant is ready to discuss the letter of intent, I go in on a Zoom call with you. And then when you assign it, you get paid on that example 40,000 or 100,000. It depends how many years they're going to sign. So it's that's why we call it the joint venture JV. So if you hear JV, it's like, well, what's JV? It's a joint venture for you to join this. You're under no obligation to assign the deeds to me. You can buy them and keep them with the income. But I highly suggest you look at the asset protection when you all hold properties with 500,000 plus equity.
Great. I wanted to remind everyone here, can you please use the chat or the Q&A to ask any questions if you have? And one question I wanted to ask you, Sharif, what if somebody is looking to buy another property right now? Would it make sense for them to add that right away into this LLC, or how does that work?
So the way it works is you get set up. And when you actually add properties, you just call our office. I need one more lien. So we draft the lien. We charge a fee for that lien. It's not expensive, but actually, guess what? You set up the lien once for life. Like I have properties I own since God knows how many years, but it's one lien that I put it. When we renew the loans with the bank, I explain to the bank, you want me to remove it? And then I put it back, but that's to me. They have the copy of my LLC and they're good with it. And commercial banks understand these structures. But if you are not sure yet about which property, wait till you get a property because when we record the lien, it has to be on against an address with a property description, etc.
So when you add the property in there and then you put the equity, right? Whatever you have the equity in the property, that's you put the lien against or the
Yes.
whole property value.
That's what protects you, the entire value of the property.
And
We
cover it.
go we go sometimes a little 5% higher. Why? just to make it actually, we don't go crazy, but we go like 5% higher to make it very unappealing for any plaintiff attorney. When they look, they see our assets, because you can't hide the assets. They have systems to find anything you transferred or whatever. But then they see there is no equity, and there is no way they can even know who the owner is of the Wyoming LLC, because you have to get a court order to go to a registered agent to finally say who is the owner, and the owner is a living trust, and by law it doesn't show who the beneficiaries are. So it's just, and we don't have to hide anything. Like when we're in court and we're asked, yeah, I am the owner. I set it up before the incident. I didn't know I was gonna hit the guy backing into it. I didn't know he's gonna come and my dog is gonna bite him. I didn't know my son is gonna, he's new at driving, he just hit this guy on the bicycle. You see, there's a lot of liabilities in life. You could have a perfect day, and then suddenly some renter calls you and tell you had a party last night and they tripped and this guy opened his head wide open. We're gonna sue you because we told you to fix that step. You never told me. We sent you a picture. All people, if they know you have money, they look at you different. And if you want to build it one step at a time, you got to protect it all the way through.
Okay, so if somebody is just raising capital, would this strategy work for the capital raisers too? And if it does, how would they protect themselves?
This is very powerful. So if you have a syndication, which is when you raise money for one asset, or if you have a real estate fund where you structure to put many assets in it, we also help people with that if needed. But the thing is, it protects the fund. It protects the syndication. So if you bought that property and put it in a syndication and you raised the $200,000 from 4 people that are your investors, and you record a lien, it protects their money as well. And you can tell them, let me tell you how different I am regarding your capital. Your capital is sitting here protected. We have insurance and we have an equity strip to protect the syndication, which is us together. You're not protecting yourself from them, you can't. Because that type of structure, the SEC says you are together, you have to protect each other, and that protects you all. Very powerful for syndications.
So, but what if one of the investor goes after you? Then what happens? Because it could happen, right? If it's in a fund, you have multiple investors in the fund. And if you put the fund under an LLC for the asset protection, and let's say one of the deal goes down and then something didn't work out, and one of the investor thinks, oh my God, I'm going to go after this capital raiser. How would that work?
This is a great question. Actually, this is one of the best questions I've had. And I'll tell you what it is. When you set up the asset protection that I'm sharing with everybody here, it protects you and your structure and your group of investors against anybody from the outside. The neighbor want to sue you, all the people that want to sue your entity. Now, within your entity, the LLC, that's a real estate fund or real estate syndication. If any investor want to sue you, what protects you is that you filed with the Securities and Exchange Commission under Reg D 506B or Reg D 506C, and that is a private placement memorandum that will have 3 to 4 pages of disclaimers and disclosures saying you invest, there is risk. We could have another COVID. We could have another problem with the market. We could have war. We could have interest rate changes. We could have new competition. We could have this. And when somebody invests, they're telling the Security and Exchange Commission, I am giving my money to Susan. She is the syndicator, she's the fund manager, and I accept the risk. That's why there's something called the qualification questionnaire and the subscription agreement. That's all. We can do a whole other program on this, but that's a great question, because with the asset protection and the private placement, you're protected both ways, from the investors and from the world outside. And that's how you can do business and sleep at night.
Great. I love that. Thank you so much for sharing wealth of knowledge. So everyone, if you have any question, please use the Q&A or the chat. I do not see any questions for now. Do you have anything else to add, Cherif? Or tell us what else you do beside JV and the asset protection. Is there something else we need to learn from you?
Well, Ricky, what sometimes, we do like calls the second Saturday of each month. If anybody wants a membership like this, we can, go through you and find out your people if anybody's interested. And those are calls that I spend 2 hours, 3 hours on the second Saturday of each month, 10 o'clock in the morning Pacific Standard Time, which is 1 p.m. Eastern Standard Time. and I take live questions, and people send me the questions the day before. I'm in the middle of a transaction. This happened. How can I do something creative? I have a deal like this, and it's an apartment building. What's the maximum money I can make? And I tell them, split it into condos and sell the upstairs, keep the downstairs. Now get a credit. I tell them exactly what's happening and how I made millions and millions of dollars. I love doing it now because it takes all the work I do really takes so little of my time because I have a great team in Puerto Rico that handles the properties. I have a great team in San Francisco, and just I love teaching. It keeps me kind of in the know of things, and I learn as much as I teach. So thank you for asking.
Of course. No, thank you so much. I really enjoyed the session. Any more question, please? Use the Q&A. I'm gonna allow another minute. If you do not have any more questions, please
I
show
would
some
like
love to Sharif. Go ahead, Sharif.
I'd like to add something that happened a few years ago. So I'm explaining this strategy, and there was a bunch of people in the room, and then we said we're going to take a break. And this gentleman sitting at the table, I said, "So how are you?" He said, "Oh, my girlfriend and I." I said, "Wait a minute, your girlfriend? How old are you?" He said, "I'm 57." I said, "Why don't you get married?" He said, "No, I was married before, and I lost a lot of money when we got a divorce. And my girlfriend was also married before, and she lost a lot of money in her divorce. So we just, I don't want to get married because." I said, "Well, you can get a prenuptial agreement." He goes, "Yeah, yeah, but I don't want to tell her like I don't trust her." I said, "Well, you obviously don't trust her." So he started to laugh. I said, "I'm going to give you the solution. You set up the asset protection. You have some assets now, but they're in your name only. When you get married, if now you want to add her name and all this, it's a different story. But right now, you can set up and strip the equity on all your assets. And when you get married, you're making one payment and 11 payments accrue to the amount owed. So you're stripping the equity now to stay for you and put it in a living trust for your kids because you had the kids from the previous marriage. And future increase is stripped because we are deferring 11 interest payments to the amount owed. It's a great strategy for those who don't want to do a prenuptial agreement to protect themselves prenuptial and postnuptial. For those who are doctors, for those who are in high risky jobs that can create like architects or people dealing with mold and people dealing constructions and stuff like that. And if you're buying and rehabbing homes where they can come back and say you broke this or you damaged that, you put that asset protection program and you will see the difference. You will understand it because it's very simple. One LLC, one document for what you have, everything is stripped and you're in full control to make one payment per year that comes back literally to you because you have access to the bank account.
Thank you, Sharif. I do not see any more questions.
Okay.
And just wanted to say thank you again and wanted to leave everyone with one grounded thought that this is not, I think it's more than a deal actually, which defines your success. It's not just investing only. I think it's just like how well you protect yourself, what you build. That's the most important thing. And everyone, if you enjoyed whatever you heard, listened, watched today, please feel free to reach out. I put the scheduling link in the chat. Please use that to schedule a call. And also, we have special pricing for the asset protection program. So go ahead and avail that. Knowledge is as good as it is, basically, until unless you take an action. So I would encourage you, if you're looking for something like this, please reach out and then protect yourself and then scale. And that's the motto for today, I think, or forever. And thank you again, Sharif. Thank you so much for coming here and then sharing your knowledge with us. And everyone, I'll see you next time with another awesome guest. Thank you so much again.